Hello, welcome back to Global Weightless Synthetic Signal Provider Service YouTube channel. If this is your first time of visiting this YouTube channel, do your best to subscribe and turn on the notifications so you get notified each time I upload new content. Try to like and refer this channel to your network. It's been a long time I actually create a long video. Fortunately, this video gonna be long. And why I'm creating this video is to solve a big problem in the market, because a lot of people actually find it difficult to understand the direction of the market. You buy when it is selling and you sell when it is buying, or you actually get a good direction but the drawdown take you out even when the direction seems to be correct. So this video gonna teach you how to deploy the orderliness of moving averages. So we are going to have couple of moving average, like we are going to have more than 4 moving averages with different colors and different periods. And so we will study their orderliness. We have ascending order and descending order. Okay, so one major point here is that the orderliness, whether ascending or descending order of moving average loops, like moving average combinations, vary is inversely proportional to the time frame. The higher the time frame, the more chaotic the order will be. The lower the time frame, the more arranged the order will be. But at higher time frame, whatever you see at higher time frame, if the order is a bit clear, it gives you better signal when you also get the same orderliness at certain lower time frame, but not like certain lower time frame that are not too erroneous. So you can see that 1 minute is erroneous time frame when compared to 5 minutes, and 5 minutes is erroneous time frame when compared to 15 minutes. So think about this. Okay, I will start with some illustration before we go to the practical part of this content. And right here, let's have a moving average of certain period. Let's be in a virtual time frame, TA, and then we have a moving average going like this. Let's change color. Okay, then we have another moving average going like this. And then we have another moving average going like this. And then we have another moving average going like this. You see, now each of these moving averages have different periods. Let's say we're going to tag the period. I'm gonna use black. We're going to, this one is, the period is going to be labeled let's put this as TFA, arbitrary time frame. And so we have period. The period is gonna be capital T, um okay, let's use D. Let's use T. Let's use T. T1, T2, T3, and T4. Okay. Now, the slope of this the slope of this average moving average combination is positive, right? Because is the curvature is upwards. A tangent line drawn on any of this line on any of this moving average is like has a positive slope, has a positive tangent. Okay, let's select a point here. Let's select a point on this line. Then when you drop a tangent, when you drop when you drop when you drop let's use this color. When you drop a tangent, you see it's going to be pointing upwards, so the slope is positive. Okay, a positive slope signals buy market, a negative slope signals sell market. Okay, so if let's use this um if if T1 is now let's do this like this. Let's talk about fast moving average and slow moving averages. Okay, a moving average of smaller periods are very fast. They actually signals where the market is heading to in time than slow moving average. So the speed of a moving average is inversely proportional to the period of the moving average. Okay, you have to know this, that the speed v, the velocity of a moving average, is inversely proportional to the period t of a moving average. So those ones with lower period are going to move faster, and those ones with higher period are going to move slowly. So if you want to get a red signal, like if you want to enter the market, you are going to be using uh, fast moving averages of lower period. So let, let's order this moving average, right? Yes, because the moving average are parallel, they are approximately parallel, so we can easily give it an order. So I'm expecting a buy trade here because the slope is positive. So uh, so we need candles to be opening above this moving average loops. Okay, we need candles to be opening above the moving average loop. Okay, so if it is like that, it means T1 is the fastest moving average for it to go get closer to the candle, and T2 is a bit faster but not as fast as T1, and T3 is a kind of faster but not as fast as T2 and T1, and T4 is slow. Okay, so we can put down T5 also the slowest. Okay, so you can see the order of these moving averages. The order is increasing, so T1 uh, is less than, so we need to start from the fast moving average responses, the moving averages that are very, very uh, close to the candlestick. So here, or the line charts, okay. So here T1 is faster, meaning is a lower moving average. So T1 is less than T2, is less than T3, is less than T4, is less than T5. So what type of orderliness is this? Because we have descending order and ascending order. T1 is very, very fast moving average, but low period, lowest period ever. This could be 5 minutes. Yeah, this could be period 5 moving average. T1 could be period 5 or maybe period 15 or 10. Okay, so when you have something like this, let's say 20, let's start, okay, let's say 10, 20, 30, 40, 50. You see that you are ascending. So this is ascending order. The order of this moving average is ascending order. So for a buy market to happen, the moving average should be in ascending order. Okay, starting with the fastest moving average. But in a selling market, the opposite should happen. The moving average should be in a descending order. Okay, it's going to be in a descending order with the fastest moving average very close to the candlestick or line chart. Okay, we are gonna go to the chart for practical so that you can be able to see how this thing makes sense. Okay, okay. Remember in the beginning of this video I said that the the orderliness, there are two types of orderliness: ascending and descending orders. So the clarity of the order, or the ability for the order to be visible, like for you to identify the order, the identification of the order is inversely proportional to the time frame. Okay, but at higher time frame, if you're able to see an orderliness at higher time frame, then you are having high success probability when you also get the same orderliness at a lower time frame that is of lower error. That is of lower error. Okay, so for me, I'll be using a lower time frame of 15 and 5 minutes and higher time frame of 4 hours or 1 hour to check for my order. So this is 4 hour on ZAR USD, United gold against United States dollars. Okay, by looking at this, I'm looking for orderliness. So remember, this is a sell market. This green moving average, I will not mention I'm not going to mention the numbers on this moving average, but the truth is that the period of green moving average is bigger than the period of black moving average. The period of black moving average is bigger than the period of blue moving average, and the period of blue moving average is bigger than the period of red moving average, and the period of brown moving average, red moving average is bigger than the period of brown moving average, and the period of brown moving average is bigger than the period of yellow moving average, and the period of yellow moving average is bigger than the period of the dotted green moving average. This shows that this is a descending order, and you should be looking for a sell signal. You should be looking for a sell signal. Okay, and one thing I would have done is that for a sell to happen, a buy must happen. A buy cycle have to come and complete, and for a buy to happen, a sell cycle have to come and complete. So think about this is necessary in this analysis. So now, is is there orderliness in this moving average combination? When you look in the past, can you see a clear orderliness when the moving average are parallel, like when they are not crossing each other and they arrange themselves in either ascending or descending order, then we will say that the moving average is in order. It has an order. Okay, it has an order. It could be ascending or descending. Ascending for buy signal or and descending for sell signal. So here, this is not crossing. This doesn't cross. That they are not crossing, so they are separated. And because they are not crossing and they are separated, we can say they are parallel. They are approximately parallel. Okay. And remember, when two lines are parallel, they are going to have the same slope. Yeah, in advanced geometry, in calculus-based geometry, when two lines are parallel, they have the same slope, they have the same gradient, they have the same tangent. Okay, and right here, this is what we see here. So, because there are different moving averages of different periods, but they are parallel to each other, meaning they show the same direction. Okay, now when you look at this, the fast moving average are the one that are of low period and are very close to the candlesticks. So this is fastest, the dotted green, followed by the yellow, the brown, and the red. Okay, and then the blue. So 1, 2, 3, 4, 5. These five moving average always get closer to the candlestick and they help you to detect the signal. So you'll be looking for a form because in the past, a form, a form or an order of this form always create a cell like this. So when the market starts changing form, meaning that an opposite signal is forming, yes. So like during this period, you discover that the market is changing form because this green be used to be in this position, but right now it's somewhere here. One moving average change of position have all it takes to change the order of a group or order of a combination of moving average. So the order changes here. Now when it happens, your prayer is to wait for the signal you are looking for. So we are looking for a cell. So you now so in this you need to come to this session and you track this. This is a kind of change of order. Then when you track this, you need to step down to lower time frame to see the same orderliness, to see when order will be restored. Okay, because you really want to buy this market, you want to see a sell order which should be a descending order in that time frame. So let's go to 1 hour time frame. You see, when you check 1 hour time frame, you see that there is no order yet. I mean this yellow zone, there is no order for sell. It's not in sell order because it should be in the descending order. But here, I will not say it is in ascending order, but I will just say that it is out of order. It is out of sell order and we are not going to be selling. Okay, so we step down again to 30 minutes time frame. When we step down to 30 minutes time frame, okay, we are not seeing much information here. Okay, because I want to see from here, I want to detect a sell order. A sell order should be in the form where the green will appear on top, followed by the black in blue, red, brown, yellow, and dotted green, which is actually visible here, but is not smooth. It's not well arranged. So let's step down to 15 minutes time frame. In 15 minutes time frame, it's getting clearer, and so we can enter this market here because we need some small buys. You have to know the moving average that actually provide the signal. So the red and the blue is okay. So if candle came to red or blue, enter the market. In most cases, it could be brown. So you see. So when you look at the past, how the market behaved in the past, you can use it to know the signal providers here. Okay. So if you now step down to 5 minutes time frame, you see that the orderliness is clear, and you can see that most of the signals, the like the signals are being provided near red and blue, or between blue and black. So each time price enter between blue and black, there is a sell. Between blue and black, you can easily get a sell. Okay, so I wasn't expecting the video to be more than 20 minutes, but I think there's something great here. I'll touch synthetic market a bit, and then I'm gonna end the video. Okay, look at this movement on the 4 hour time frame. Okay, as usual, the green, the period is bigger than the black, and the period of black is bigger than the period of blue, just like that. Okay, so the way the moving average arrange themselves is in such a way that we can say it is from the fast moving average, from the one that are closer to the price. We cannot say that this is because this one have a low period, higher period. So we can see it is in because the counting starts from the ones nearest to the candles or line chart. So we say this is ascending order. This is ascending order. So we look for buy. Okay, we look for buy. So the 4 hour is telling us we should buy if we can get a lower time frame of the same odd moving average order, but with minimum error, with zero error. So you will keep checking time frame, just step down a bit. So here we cannot be taking a buy here because the order here is not a buy order, it is a sell order. Yes, or you may not call it a sell order, but it is an opposite order, like it is out of order, okay, for somebody to buy, right? So you will not take a buy trade here. Then you step down to 30 minutes. It becomes more clear that buyers have not started, so you should wait or you sell. Yes, because if it's not buying, then it is selling for sure. Maybe they said you have some ranges, or it could be of low volume, but all we know is that this is not the time to buy. Okay, you see, this is not the time to buy, but the 4 hour is telling us to buy, but it's not yet. So you should be selling. Then you have to change your mindset. Say, oh, the 4 hour is telling us buy, but since I'm trying to get a confirmation from lower time frame, and then I'm seeing sell, then I should sell with small risk because this is not the actual direction I'm looking for. So I should minimize risk if I'm selling. Okay, and I should sell sniper entry because this is not the actual direction. So everything has to be highly accurate, right? Okay. Now if you step down again to 15 minutes, you see the cell are becoming more clear. You see how the order, even though there are crossing of moving average, but if it crosses like this, as long as there are more of the moving averages that are separated, and in order, then it is good. It is cool. They let's step down to 5 minutes time frame. So in 5 minutes time frame, the market is noisy. Is noisy. So the best time frame to use is 15 minutes time frame. So it is optimal in 15 minutes time frame. Okay. Thank you. At the end of this video, make sure you're proactive and go for VIP signal services made for you, services for you to be, successful on daily basis. And go for a mentorship. Try to show up all the time and refer others to join us, invest in our account management services, and try to refer to other traders who are actually losing and they need us, our support to join us. You will actually get referral commission up to 30%. Thank you and bye for now.